everyone. Welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the Nifty extended its winning streak for the third straight session on Saturday. This was a special trading session. And of the last 7 sessions, we've actually seen that the Nifty has ended higher in the 6 of them as well, which means that there has been a consistent bull trend that has emerged after a whole host of volatility. The common thread across most of these sessions has also been a swift and a sharp recovery after hitting intraday lows as well, and all of the losses from the week earlier have actually been recovered in this extended week we are talking about. The truncated session on Saturday also saw the Nifty claw back above the mark of 22,500 as well, and the Nifty Bank also has managed to stay above 48,000 above for the 2 straight sessions as well. Now, as we move into today, there will be a whole host of stocks that we will be keeping an eye out on the back of earnings. So BEL, IRFC, Nesco, Whirlpool, SAIL, these will be in focus after the quarterly earnings on the special trading session on Saturday as well. Also BHEL, NMDC, PI Industries, JK Tyre, GSFC, Vatek Wabag will also be some of the stocks that will be reporting their earnings today. So we'll keep an eye out on those too. Very good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. It's Tuesday and we are now on 21st of May. Less than 10 trading sessions are left before the biggest result of only India, but of course the entire world will be out on June 4th, and the market is absolutely ready for it. As Sakshi mentioned, 6 out of previous 7 sessions have been in the green, ladies and gentlemen. At 22,502, the Nifty is just 300 points away from an all-time high. And in the 6 sessions that Sakshi mentions from Tuesday, last Tuesday onwards, the Nifty is added 1.1% or 225 points. There is absolutely no doubt in my mind that before June 1st, you are going to see an all-time high on the Nifty, driven primarily by the metals as well as the automobiles pack. But let's analyze what's likely to happen today. So 22,502 for you. The GIFT Nifty has given us a fairly okay kind of clues, that is an uptick of about 30-40 points. So with that in mind, also the fact that Wall Street has seen Nasdaq hit a record high. Remember, all of last week the Dow was up, and this time it's the Nasdaq's turn. So IT in any case would be in focus on domestic boxes, but the cues that are coming in from overseas are very, very strong. Add to that a lot of activity that has come into the metal space. I'll request the PCR to fire our usual Nifty chart and then we'll start the conversation. All of last week you saw the battle range at 21-day exponential moving average, and that, ladies and gentlemen, is now in control of the bulls. So 21, 50 and 100-day exponential moving averages are with the bulls on Dalal Street, and that's a sentimental positive. The other screen that I want you to see is of course the Nifty Next 50 index. This, ladies and gentlemen, hit a record high. It rallied about 3.5% all of last week. And apart from the Nifty Next 50, there is the Nifty Mid Cap 100 index that has also hit a record high. So large parts of the market are already at peaks, and it's only a matter of time that the Nifty also moves in that direction. Let's look at some basic details that have come in as far as this index is concerned. Let's look at the Nifty options chain, this time for the 23rd of May. Remember, this week is truncated because Monday was a holiday and Saturday of course was a truncated session. Therefore, the options premia are a bit more volatile than usual, and of course we have the major event on June 1st, which is the exit poll. 2 more sessions left for elections, but they are on Saturdays. Therefore, the volatility that we've seen on election day will not be there. Therefore, let's look at the Nifty options chain. There is Sakshi very, very strong ITM call covering, which points to the fact that bears are slowly but surely moving away from Dalal Street, and upper regions of the Nifty are opening up. You have a very, very strong support at 22,400. If you look at the put writing there, it's phenomenal. That shows that bulls are in very, very strong shape as far as 22,400 and 22,450 are concerned. Remember, we shut shop at 22,500 on Saturday. Therefore, any dip towards 22,450, and if you are really lucky, 22,400 should be purchased and welcomed with open arms. That's what you need to do on the Nifty. And what is driving them? Metals, Hindalco, Tisco, Steel Authority. They're in very, very fine shape. Let's look at what's happening in the automobile space. There is no stopping Mahindra and Mahindra. There's a very strong trend emerging in all the auto stocks, which is Hero Motors, Eicher Motors, and of course Bajaj Auto. Strong traction on Ashok Leyland as well, and Maruti too. So that's the segment that's pushing the Nifty up. Now Sakshi, the most important development which you've been tracking better than me, which is the gold and silver prices. We'll try and show you the chart of how gold futures are at a record high, as also silver futures at a 5-year high. There has been a very sharp burst of activity across the board as far as metals are concerned, as also copper. So if you are looking at this combination, look at Hindustan Zinc. That stock has already been one of the best performers in the F&O space over the last 1 month or so. So Hindustan Zinc is a combination of zinc as well as silver. It's the largest producer of silver in India. Therefore, keep an eye out on Hindustan Zinc. Hindalco is something else on the Nifty, which is doing phenomenally well. These are the two charts. And of course, if gold futures are up, you can't hold back Manappuram Finance as well as Muthoot Finance. These are the 4 or 5 stocks that you need to look at as far as the metal space is concerned. Earnings reaction is coming in very strongly from BEL. Sakshi will give you the details. I'll just mark one very, very important part. It's the order book. 74,000 crore rupees, it's the outstanding order. In the year FY25, there was talk of addition of about 20,000 crores in terms of guidance as far as order book. That's coming at 35,000 crores. Similarly, you'll see a very sharp uptick in ONGC and Steel Authority, where profit for the fourth quarter has gone up by 4% respectively. Steel Authority, there's a minor dip because of there was an exceptional loss of about 502 crores, but profit has been fairly good. Apart from that, a 1:2 bonus on Oil India. The earnings there were also fantastic. And of course, we'll be keeping an eye out today on earnings boys, BHEL and NMDC as far as F&O is concerned from the PSU segment, as also Metropolis Hotels and PI Industries. 2 block deals will happen. CG Power 425 crores and Indus Towers about 240 crores. So these are the broad numbers that I'm looking at. There's nothing much happening in the Bank Nifty. It's still 3.7% away from an all-time high, which is 1800 points away, 50,000. We shut shop at 48,200. There's weakness in HDFC Bank, which is the highest weighted component. It's still below 200 DMA, but a good show coming in from Axis, ICICI, and of course SBI. So that's the broad theme. I remain glued to the PSU segment as far as the volume as price action is concerned. Sakshi, how about earnings? How about Wall Street? How did they do?
Absolutely, Shail. So the US markets closed higher on Monday as investors remained positive about Nvidia Corp's earnings following bullish analyst calls as well. Remember, at the S&P 500 ended about 0.09% higher. The Nasdaq ended at record high levels, almost about 0.6% up in trade. Now, it was the Dow Jones that ended lower. However, about 0.5% of a cut was seen on the Dow Jones. Now, following this, most markets in the Asia Pacific also reversed the gains in the early trade on Tuesday as commodity prices rose, with gold trading near record high levels again. Geopolitical tensions in Ukraine and West Asia as well. So large part of the Asian markets is still lower. Kospi, Hang Seng, Shanghai all about 0.3 to 0.6% odd decline. Nikkei, however, was seen about 0.25% up in trade as well. Now, when we talk about the flows, the foreign institutions have turned the net buyers in the cash market during Friday's trading session. Now, this happened for the first time in the month of May. We did see that they bought about 1,616 odd crore rupees of stocks on Friday, whereas the domestic institutional investors stayed buyers for the 19th straight session, buying about 1,556 odd crore rupees worth of stocks as well. As far as the gift Nifty is indicating, now look at the kind of trading that we've seen in the early trading session. 22,605 is the level at which the GIFT Nifty is indicating a premium of 60 points for the Nifty to start on a positive note even in today's trading session. Whole host of earnings that we'll be keeping an eye out on. Let's start with ONGC first. The Q4 standalone quarter-on-quarter results showed that the net profit was down 0.2% at 9,869 crores. Revenues was down about 0.4% odd at 34,636 odd crore rupees. EBITDA, however, improved, and the margins also came in at 45.88% versus 44% almost earlier, on a quarter-on-quarter basis as well. Amber Enterprises, that's another one. Q4 year-on-year profit showed about a downtick of almost 8.5% to 99 crores, and the revenue was down about 6.6% at 2805 odd crore rupees. Ujjivan Small Finance Bank, here the Q4 year-on-year numbers showed that the net profit improved about 6.5% to 330 crore rupees. The net interest income was up about 26% at 934 odd crores. The net NPA also showed some kind of an uptick at 0.28% versus 0.17%. So that's a bit of a weakening trend that we are looking at. Now, when we talk about Trident, Q4 consolidated year-on-year numbers show that the net profit was down 54.8% to just 59 crores. Revenues, however, improved by almost 7% to 1682 crores. EBITDA was down. Margins also came in much lower than the earlier levels of 16.9%. It came down to 12%. So that was another weakening trend. Data patterns on a Q4 year-on-year basis showed that the net profit was up 28.4% to 71 odd crores. Revenues down by 1.5% at 182 crores. However, the margins improved substantially from 39.6% to about 51% as well. And there's a dividend announced of 6.5 rupees per share. India Cements on a Q4 consolidated year-on-year basis, revenues here came down 15% to 1267 crores. The net loss came in at 61 odd crore rupees. However, this has narrowed sharply from 227 odd crore rupees the company had reported a year ago as well. Margins came in at 2.9%. Oil India has reported its Q4 numbers on a sequential basis. We've seen that the net profit was up 28% to 2,029 odd crores. Revenue was down by 1% at 5527 odd crore rupees, and the margins came in at 42.3%. This is an improvement versus 39.6% earlier. From the railways pack, IRFC will be in focus on a Q4 YOY basis. The total income came up 5% higher at 6,473 odd crore rupees. The net profit improved 34% at 1717 crore rupees. BEL, as Shail was talking about, Q4 consolidated year-on-year numbers show that the net profit has improved substantially, 30% higher, 1797 odd crores. Revenue is up 32% at 8,564 odd crore rupees. EBITDA has improved by 25%, 2,287 crores, and the margins have come in at 26.7%. Here there is a dip versus 28.3%. But good earnings coming through, and the order flow details have already been shared by Shail. Now, as far as the City Union Bank is concerned, Q4 YOY numbers show that the net profit will improved about 17% at 255 odd crores. NII also improved by 12% at 547 crores, and the net NPAs came down at 1.97% versus 2.19%. SAIL on a Q4 consolidated YOY numbers, the net profit was down 2.8% at 1126 crores, and the revenues came down by 4% odd at about 27,958 crore rupees. EBITDA improved, however, and the margins also improved to 12% versus 10% earlier as well. So those are some of the stocks that I'm keeping an eye out on, Shail, on the back of earnings.
Okay, Sakshi, I think what we'll do is we'll again show you the charts of the gold as well as silver futures. 2 or 3 important things that need to be discussed. We are also waiting for Mr. Dharmesh Kant, Head of Equity Research at Cholamandalam Securities, to join us. Sakshi, this very sharp uptick on gold and silver. Year to date, which is between December 31st, 2023 and today morning, 17.3% uptick in gold prices, and in the last 1 month gold prices have been up by about 4%. We'll again look at silver. If you were with us when Mr. Jim Rogers had graced our channel as well as our shows about 3 months ago, he had said that buying silver might be a little more profitable than buying gold, although gold has also turned very, very profitable. So silver futures, Sakshi, in the last 1 month have been up 17%. And we'll also try and show you the chart of Hindustan Zinc. Remember, it's India's largest producer of silver, as also silver is up 33.5% as far as the year-to-date performance is concerned. So keep this in mind when you look at how Hindustan Zinc is moving, how other metals such as metal stocks such as Hindustan Copper, Hindalco, Steel Authority, Tisco are moving. It's a whole host of metals that are near record highs, at record highs, or at fresh peaks that are gaining momentum. Mr. Dharmesh Kant, Head of Equity Research, Cholamandalam Securities, joins us. A very good morning to you, Dharmeshji. I hope you voted yesterday in Mumbai. How do you see sentiment on Dalal Street? What tickles you in the pink of health, and where do you think the markets are headed?
Good morning, Shalji. Good morning, Sakshi. Yes, I did vote. So it was a good lot of sweat, and because it's very humid out here in Mumbai. So I hope that politicians also do the job very rightly this time around, because sweat and tax we both give when it comes to voting. See, the sentiments are quite positive on the Dalal Street, and if you look Indian markets in the global context, we have been the real underperformers. Like US is up more than 10%, the developed economy of Europe is up more than 10%, even China has caught up very well. Hang Seng Index is up around 15%. This I'm talking about year till date, where we are up only 3.5%. Earnings have panned out really well. I mean, 15-16% kind of ex Nifty, ex IT growth of 256 company aggregates is there. So I think everything is pretty much sound. We are just, our gestation period is playing out for the election outcome, which if in case it's favorable, the continuity of this bull market is likely to continue with the select pockets and sectors doing fairly well. So I don't see a problem out there in the market. Be a stock picker in this market rather than eyeing the index level like Nifty or Bank Nifty.
Okay. Warm welcome to you, Mr. Kant. Thank you so much for taking the time out. Well, any stocks that you have really looked at adding or have added in the last few days? We've seen a ton of volatility, maybe giving you an opportunity right there. Which are the key stocks that you've turned bullish on now?
Yeah, good morning, Sakshi. See, stocks have been same, the sectors have been same, and unfortunately, they never corrected significantly to add on. So we have been continuing with that level, and minor additions or recommendations our clients have done. So stocks are in the defense space like HAL, BEL, DCX system, on which we had a coverage as well. They have been doing well. Railway infra like RVLL, Ircon. Multiple times I have spoken to you on your channel as well about these companies. They have been doing pretty well, and they are likely to do well. So these sectors will continue to do well. Banking space, ICICI and SBI looks pretty attractive. Only the large cap and the bigger players out there with a good CD ratio in place. In banking, one is to be mindful of the fact that if the CD ratio is in favor, I mean 80-85% kind of that CD ratio is there, that gives you elbow room for growth. So that we have added, and a bit of diversification towards stability, where the fundamental value is highly deeply in place, was two insurance space, that's two from the public sector space. One is LIC India, and the other one is GICRE. So these two companies are the fresh addition to the law. And Texmaco Rail, things like that. So quite a diversified portfolio basket, which we have created, and the focus was purely on infra and growth.
Okay, so especially post the earnings on HAL versus BEL, how are you really looking at? Over here, we've actually seen both the stocks have seen upgrades from brokerage houses after the earnings. Jefferies has given a buy rating with a target price of 5725 on HAL now. It does believe that the management has on the call well articulated that the margins should largely be sustainable as the cost optimization is a focus. Also going forward from here, there are enough order book place that the company could be really looking at. Even on BEL, we've actually seen a whole host of earnings revisions coming in after the earnings came in. So Jefferies has raised its target price to 305, and it does believe that from FY26 estimated to from FY24 estimated to FY26 estimated should see double-digit revenue growth based on the order book and pipeline as well. How are you really looking at these two stocks, and would you continue to incrementally build on the positions despite having run up so much?
Definitely, yes. See, incremental trading, if you do quarter on quarter, on year, these kind of analysis will definitely come up. But the big point here is there is a paradigm shift in the type of business order book they are having. I mean, if you look at the past 10 years history, it was more of a service kind of order flows which these companies were getting overall kind of an order book inflow, and that was a low margin, low value addition kind of activity. Now both these companies are getting quality order book. The quality of the order book is very high, and it's likely to increase further. So next 5 to 10 years, they would be, walking into a different trajectory altogether from what they have been doing now. So from that lens, if you are looking at these companies, in 3 to 5 years time, they would more than double from where they are trading now. So in between, there will be minor corrections definitely, and input prices and all these things will play out. But broad picture is the order book will almost double from where they are standing. That will be the kind of flow which will be there next 3 to 5 years time frame. And with technology know-how coming into their, ambit, the scale and quality of order book, the type of work they do will also increase. So but there is no looking back for these two companies, HA and BEL, and most of the defense companies in that bracket is very, very high. So what we have been telling our clients, don't look at quarterly earnings update. Even for these companies, you should not be looking at even yearly earnings update. Just look at the trajectory in which these companies are doing and the type of orders they are receiving. And even the exports have increased for BEL, and they were expecting 20,000 odd crores of order book. It went to 30,000 odd crores in the last quarter going by. And this would be a trend. Be a buyer in that, stay invested for 3 to 5 years, and results will flow automatically. So, very good companies to be as a portfolio. You should be having them into your basket.
Absolutely. Not only are they very good portfolio candidates even at these levels, according to Dharmesh, what is also beneficial is that they are wonderful trading hotspots as far as aggressive high frequency traders are concerned. You just need to look at the last 6 months of Cochin Shipyard, Mazgaon, not exactly Mazgaon, but Cochin, Garden Reach, Hindustan Aeronautics, and of course BEL. They've shot up extremely sharply. For the numbers minded, BEL had guided for an order book addition of 20,000 crores in FY25. Ladies and gentlemen, in FY24, that number has come to 35,000 crore rupees. Overall order book is 74,000 crore rupees. So you can well imagine the kind of foresight people have in terms of what their sales could be in the coming quarters and the coming years. Dharmesh ji, your pick in the metal space, underlying metal which is copper, aluminium, gold and silver, all of them are flourishing at record peaks. Where would you put your hope on as far as equities are concerned, especially Hindustan Zinc? Does it look overstretched, or is there more ahead?
Shailji, metals has always been a play for the brave hearts because the volatility is too high for these companies, even in the equity basket. I mean, metal commodity prices do fluctuate quite frequently. The frequency is very high. And same has been the case with the equities. But it's a cyclical play, and the cycle started a couple of months back with China picking up the growth trajectory. So China is a 18, $19 trillion economy. So even a small pickup is there, it actually gyrates the metal basket in a big way. As far as companies are concerned, I think one has to play a mix of all. And there, I think these three companies stand out: Hindalco, Hindustan Zinc, and Vedanta, which is a pure metal play. I am avoiding the steel space as of now. So, steel space, if one wants to be into, maybe a JSW Steel can qualify for that. But other than that, it should be more of a copper, aluminum, and zinc oriented with a tinge of a silver play into it, because silver prices have also gone up very high. And essentially, the best part of this market is all the asset classes are doing well. Not only equities are doing well, but even bullions are doing well, metals are doing well. And in the US market, if you look at the 10-year bond yield, there has been an aggressive bond buying as well. So a lot of surplus money is sitting on the sidelines to be deployed on all asset classes. And these companies are doing well. Just to answer your question in a very short, is Hindustan Zinc and Hindalco and Vedanta looks attractive even at current levels, and this trajectory is likely to continue the upside momentum with its bouts of corrections into play. So use the corrections to equilibrate them.
Okay. I'll ask you, sir, on Concor as well, what is your view? Because after the earnings, there is a divided view from the brokerages. Jefferies, on the one hand, has raised its target price to 1240, whereas Kotak Institutional Equities has given a sell rating with a target price of 740 on Concor. Of course, there has been a miss on the earnings factor in the operating profits as well due to weak profitability. As far as lower margins are also concerned, there is also a drop in domestic cargo realizations that the company has reported, even though Jefferies believes that the management has guided for an 18 to 20% year-on-year volume growth driven by road to rail kind of a shift going forward. But how are you looking at this stock really? We've actually seen in the last 1 week, 10 days odd, seen strong traction on this stock. Do you see this positively, or is there still some more way to go before you, take a pick on this one?
Sakshi, to be very honest with you, I mean, this entire space, the logistics space, and which is more of a capital and labor intensive kind of a play, as a house, we have always avoided that because these are low margin and that to the fluctuations is very high. And I mean, the frequency at which the rates also vary is too high for, to come out with a good set of estimates and the stability in the estimates which you project for the earnings. So, because of the volatility in the earnings, even projection-wise, the company definitely has a volatile earnings trajectory. We tend to avoid such sectors because they are much better and stable place to play out for. Well, valuations may be a bit, it depends on relative basis. For some it is stretch and some it's still a growth valuation. So that's better place. So avoid logistics. That is our sense. So we are not into this space at all.
We'll have the pre-open rates in front of us, ladies and gentlemen. There's a minor glitch. This is not the level of Nifty which we will see in the next 9 minutes. This will improve dramatically. Let's look at stocks which have come out of earnings and then keep attention to them. A 10% uptick, ladies and gentlemen, on ONGC, 306.90. BEL earnings boy 10% higher, 284.65. Very strong uptick coming on Kalpataru projects, 12.5% higher, 1375. Remember, these prices will settle dramatically. I have a Signature Global 20% higher, 1566. No, these prices will not be activated post pre-open. Signature Global has of course purchased some land in Gurgaon. That's news driven. But these prices have to come to sensible levels. We'll wait for a while. Let's see if FNO is a little more sensible. Okay. Balkrishna 5% higher at 29.49. Remember, on Saturday it had reacted to its earnings. It had given a decent uptick. Vodafone Idea is 5% higher, 13.95. There is an upgrade from Nomura today of a price target of 15. They've upgraded it from 6. Hindustan Aeronautics 1.5% higher, 47.99. You have Manappuram Finance. Of course, this is something that I need to look at. 184.80, 1.65% higher. Remember, this is the brush off of higher gold oil prices. I just want to see what Muthoot Finance is doing, if I can find that out, because that will also be in FNO, MNOP. Okay, Muthoot Finance is a percent higher, 1777. Okay, Zydus Life continues to be 10% higher at 1190. What we'll do is we'll wait for prices to settle down, and I believe Mr. Ratnesh is with us. Ratnesh Goel, Senior Technical Analyst, Arihant Capital Markets. Good morning to you, Ratnesh. If you can hear my voice, your view on any of the metal stocks you think will continue to show upward momentum.
Very good morning, Shail. Very good morning, everyone. And so you also. If you look at the metal stocks, I believe that the hinging is a very good formation, and I believe that it is going to outperform all the metal stocks, and it has given the multi-year breakout. So I believe that in every day we should use the hinging as a buying opportunity. 580, 590 will be the good level for the buy, and upside the target I can see that 700. for 750 also in the midterm.
Okay. Any other two stocks that you are looking to track as far as markets are concerned today, on the long side or on the short side?
The first stock is the data pattern.
Yeah, Ratnesh, this was for you.
Yeah, you can hear me. So data pattern, I
Yes.
believe that it has given the very good breakout of the rounding formation, the daily chart, and I believe that this momentum will remain continue. So I believe that if, for the short term, medium term, one should hold with the stop loss 3200 for the coming days target, 3400, and the extended up to the 3500. And second one is the IRFC. IRFC also has given the sloping trend line breakout. So I believe that we can see the target around 190 with the stop loss 166 for the short to medium term.
Okay, viewers, let's do like a gold and silver check as well. Today there is a dip on both gold and silver on the MCX. They've opened with a dip, so silver is down 1600 rupees per kilogram at 93,740 odd rupees. Gold, when we see, there is again a respite of 600 rupees per 10 grams, so it's opened at 73,762 rupees as of now. MCX is just flattish at this point in time. But how are you really looking at these precious metals related stocks, Ratnesh? Would you look at jewelry stocks? Would you look at gold financiers? Anything that looks positive to you?
If you look at the financing, the gold financing stock, something like in the Muthoot Finance is outperforming in this category. So Muthoot Finance, I believe that it will remain the outperform. If someone holding this stock can hold with the stop loss around 1630, and the fresh breakout will come after the 1750. The fresh buying one can initiate after the 1750, and if someone holding from this, so 1630 will be the stop loss for the holding.
Okay, got that. Let's get Dharmeshji into the conversation too. Dharmeshji, on both the ONGC and on Oil India, how are you looking at these two stocks after the earnings? ONGC is up by 2% in the pre-open. Weak margins, realizations were lower, but definitely we've seen an improvement on the EBITDA front on Oil India as well. One for two bonus as well, and EBITDA improved by 7% odd. How are you looking at these two stocks, sir?
We are neutral on both these counters at current levels. So would be waiting for a meaningful, decline in these two counters to add on. So it's more of a cyclical play to us from here on. And I think as a trading play, you can still add on to these counters. But for, investment perspective or trading perspective for 6 month to 1 year kind of a horizon, we would wait for a good correction to step in, and then we would add on to both these counters, not at current levels.
Okay, ladies and gentlemen, I think I'll have to mention the pre-open prices now. There seems to be, I think, a circuit issue. Yesterday, remember on Saturday, they were linked at 5% only. Maybe there is some issue. I can't fathom any reason why this kind of prices should be there. Nevertheless, Nifty settled 97 points lower at 22,404. Bank Nifty is trying to open 272 points lower at 47,927. The IT index about 185 points lower. Let's just give you the prices. Now they've settled, so we have no other option but to accept them. HDFC Bank is 16 rupees lower at 1450, already below 200 DMA, so that's a pain point for the Bank Nifty as well. Infosys 13 rupees lower, 1430. Reliance is now at about 18 rupees lower, 2851. These are the three heaviest weighted counters on the Nifty, all three of them in the red. In fact, why all three of them in the red? The entire 10 index heavyweights on the Nifty are opening on a back foot. TCS 0.5% lower, Axis and ICICI Bank about 0.6 and 0.7% lower, L&T 0.2% lower. There hasn't been any reason for this kind of a move. Nevertheless, prices are prices. We tell you what we see. Okay, Now there's some good news coming on Nifty 500. Earnings, boys. BEL 9% higher, 283. Needless to say, a record high. Bharat Dynamics 4% higher, 2539. Balkrishna and Whirlpool. Whirlpool is also reacting to numbers, 2 and 3% up respectively. No stopping Hindustan Zinc, 2.7% higher, 636. IRFC, this is Ratnesh's pick, 2% higher, 176. Let's look at the FNO space. I want to see a couple of stocks. Idea Cellular is trying to open 1.9% higher, 1355. Container Corporation, Sakshi's pointed this out, 1.5% higher, 1118. Biocon and Trent both up 1%. Top losers, HCL Tech, Power Grid, Divi's Lab. Let's get Ratnesh into the conversation. Ratnesh, any reason why you find the Nifty on the back foot? I find it mystifying.
Well, I think it is really surprise to everyone because of the negative opening. But I think that I believe that let the settle 5-10 minutes just wait, and I think it could be the opportunity as so if around the 22,350 360 it will be the good support level. If we get that level, I think it could be the buying opportunity. One should try at this level because the risk reward ratio will be in the favor. Keep the if we get that level, so keep the stop loss 22,300 or 22,320, and the upside target I believe that 22,480 and 500 it should come in the 1 or 2 days. So I believe that it's the negative opening could be the some buying opportunity, but let the first 5 and 10 minutes then take the decision.
I can look at a sharp gain following results as far as Patel Engineering is concerned. Remember, the profit for the company zoomed 83% to 141 odd crore rupees. Revenue improved by 12%. The stock has also shot up about 15% in the pre-opening trade as well. 15.7%, yes, at 67.8. Ratnesh, would you have a view on this stock?
Patel Engineering, if you look at the Patel Engineering, definitely so opening good after the good result, and on the daily chart it has taken support on the 200 moving average showing the rounding formation. So I believe the 66 will be the a little supply from here. Vincent cross that 66 level. So I believe I can sense that we can see the 70 or the 75 target. So if someone holding from the lower level, keep the stop loss 61, and the once it cross 66, we can see the higher target 70 and the 75.
Okay, let's also focus a bit on the retail space as well. So Trent is opening a bit higher as well. Some of the mid-cap stocks like from the earnings as well. Kitex Garments is opening 6% higher after the earnings. But I wanted to ask on Trent particularly with Dharmesh ji. Dharmesh ji, after the analyst meet highlighted that management sees significant growth potential in the Indian fashion market. Competitive intensity has obviously increased in the last few years. But both Westside and Zudio, they believe there is enough headroom for growth, and there is a focus on organic growth and no plan to open large Zudio stores. These are some of the highlights that have come in. 1% higher at 46.90. Would you be a buyer on Trent?
Yeah, definitely. Sakshi, here you have to forget the valuation multiples. If you go to Westside or Zudio stores and do a personal check, it's a complete revamp. I mean, the entire look and feel is totally different. It's like a Zara, it's a version of Zara of India's answer to that. And the sales have been terrific. I mean, 20 minutes, 30 minutes kind of a queue you have to wait in if you have done some shopping out there to pay the bills and get your product back. So I think management is right, and they have got it right. In the same space, there are others who have tried the similar business, but unfortunately, they have not been able to strike the chord with the Indian consumers. Where these guys have got that equation in the connect right, and I think if they are going to drive on with this kind of a trajectory, and with the products which they are rolling out, that continues in the similar direction. So it would be exponential growth for Trent and Judio in particular, the value they give for the products and keeping in mind the Indian consumer paying capacity in the tier 2, 3 and 4 cities. So that is where their real opportunity lies. And I mean, one has to ride this trend. It's a leap of faith on the valuation front, but it's likely to continue going forward. Business-wise, they have been doing phenomenally well. And I have a personal experience. I went to 5-7 stores to check this out, and everywhere I found the story to be intact.
Okay, we still have 2 minutes left. Let's for a change look at some other baskets where you might see a strong uptick coming in. IRFC 2% higher, 176.75. We have Oil India. Remember, the companies announced 1 for 2 bonus. The earnings were fairly decent as well, so keep an eye out on this one. Oil India trying to settle at 656, up 1.5%. The entire railway chain is doing pretty well. A decent upticks of 1.5% coming in on all rail goods. Let's look at this space. Remember, for the last 15 days, this has been one of the blowout performers. No stopping Kirloskar Electric, 4% higher, needless to say, record high, 236.3. This is again low ticket. It may not be high beta, but it's still low ticket. You have Shakti Pumps opening 3% higher, and of course Kalpataru Power. This is post earnings 9% higher, 1310. Needless to say, a record high. The entire Kirloskar pack, Sakshi, again in the green. Kirloskar Pneumatic 2.8% higher, 1245. KEC 791, 1% higher. You have some other stocks in this space which are doing pretty well. Dharmesh ji, very quickly coming to you. I think we have we have opening rates. Let's just look at them, ladies and gentlemen. As rightly Ratnesh had mentioned, it was an opportunity to buy. Just 26 points lower, 25,476 on the Nifty. Bank Nifty just 77 points lower, IT index 46 points lower. This will improve dramatically. Let's look at stocks that are already in the green as far as index heavyweights are concerned. Kotak 10 rupees higher, 1706. Bank a rupee 50 higher, 2 rupees higher now, 1132. How about HDFC Bank? Now just 7 rupees lower, 1458. Infosys almost in the green, just a rupee short, 1442. How about Reliance? Just 5 rupees lower, 2864. Very quickly we'll look at earnings performers. Okay, BEL, tighten your seat belts, ladies and gentlemen. 7% higher, 276. IRFC 3.5% higher, 178. Let's look at the NSE 500. That's a better estimate. Okay, we have a strong move coming into data patterns, 3.3% higher, 3430. No stopping Vedant, 2% higher, 467. Idea Cellular 1.8% higher, 1355. Let's look at the most active list. I'm sure there are a lot of common names. Okay, there's a block deal that's happened on CG Power, ladies and gentlemen. 3.5% lower, 641.90. Remember, there was a transaction of 445 crores to happen. That has already been done. What else is in the green? Hindustan Aeronautics 47.43. You have BDL 8% higher, 26.28. Cochin Shipyard slipping 2% lower. BHEL, today's earnings boy, 311, 0.3% higher. Strong move coming in. How about volume buzzers? Anything that catches your fancy here? Okay, there's a transaction that's happened on Aptus also. I'm not sure what the reason is, but 3 crore 72 lakh shares have been traded. 6% lower, 296. Let's get to Ratnesh immediately. Ratnesh, you were bang on target. That dip was to be purchased on the Nifty. Still down 43. Let's see how it shapes up. 22,450. Anything that catches your attention in the opening trade, and especially BHEL, your view there?
Now, if we first talk about the BHEL, so you are asking about BHEL or BEL?
BHEL, earnings boy today.
So BHEL definitely is a near bit around the supply. I believe that 315, 317 is the major supply zone. So once it crosses that, definitely we are going to see the fresh breakout, and we are going to see that around the 350 level after that. So just wait for a little bit and let the cross this level 315, 317. Then we can take the fresh long entry. But definitely, if someone holding from the lower level, still there is a no negative in the chart. One can hold this stock with the stop loss 295. And if you look at the morning, I believe that in the stock OIL from the mid cap escape, the Oil India OIL is showing the after the consolidation the fresh breakout. So one should keep stop loss 640 and for the target. I believe that we can see the around the 690 700 in the near term.
Okay. Let's get Dharmesh into the conversation on Balkrishna Industries. The stock is opened up higher by about 7.5% higher. This is following the upgrade from Nomura on a buy rating with a 32.30 kind of a price target after the earnings. And Nomura believe that, of course, going forward from here, there is the stock is entering or a company is entering a demand upcycle. Price hikes will support the margins going forward. Your own sense on Balkrishna, sir? How should you view this?
Yes, this company is primarily into the off-highway kind of a tires as a last tire for most of the capital good construction equipment. So there, I think the cycle may pick up, but we are not very conducive from this company as far as long-term play is concerned. Trading bets can be there because rubber prices are on the upcycle. So if any increase in rubber prices are there, then the operating margins will come under pressure. And the tires which these companies make are a long gestation period tire. One tire takes itself, 3 months to 1 year kind of a time frame, depending on in which equipment these tires are to be used. So presently, I do think next 2-3 quarters are likely to be good for this company because the earlier orders which they have got would be materializing and the revenue would be booked into them. From that perspective, it can be a trade. But considering the valuations and sensing how the rubber prices are behaving in the international market, we are not a long-term buyers on that. So trade may be on, but not an investment play.
Okay. How about Zydus Life Sciences? I'll take yours and then Ratnesh's view as well on the technicals. It's up about 8.5% yet again today, the top mover on the F&O space, sir, consistently moving on the higher side.
The company is good. The businesses have been doing fairly well. But as a house view, we are now avoiding pharma space completely. So we are more focused on the growth oriented, high frequency earnings trajectory kind of a play right now, rather than more for defensive play. So if you want to go for defensive, it's more from the insurance space rather than pharma.
Ratnesh, your technical view?
Sakshi, I think
Zydus Life chart, it's continue making the high formation and recently it has given the rounding formation breakout at the 1030 level. But after the result, we have seen the gap up opening now a little bit stretch on the chart. Definitely, as of now, for the fresh entry is a little bit of stretch and the higher level. So I believe that just let it wait and just try to fill this gap, the upward gap area. Once it touches this upward gap area around the 1100 or the 1080, something like this, it could be a good level for the fresh entry. But someone holding this stock can hold this stock with the stop loss 1040.
I think, Sakshi, the stock for today will be a competition between BEL and BHEL. Let's focus on BEL first. It's an absolute blowout. Post earnings, which you've described and I have spoken on, 9% higher at 281. Needless to say, this is a record high, but it's the volume. It's just 5-7 minutes into trade and people can't get enough of it. Already 900 crores has been traded. That's 3.42 crore shares. It's unbelievable. And again, if you remember, we've had so many guests coming in saying that just focus on the order book, keep the stock as delivery, and just remain invested. Ratnesh, you were right in asking me, should I speak on BHEL or BEL? And I had asked BHEL while you were right. Now, let's get your view on BEL.
BEL after the result today, we have seen the very huge gap up, but still the stock showing on the daily chart gap against the gap is called the upward gap area. So I believe that still this stock is, the stock is still looking good. It's continuing making higher high. So definitely still I believe that if someone holding this stock, there is no need to hurry to sell this stock. If the revise this stop loss at the 255 and hold for the target to 325, 350 in the midterm. Even the fresh entry, if someone want to take the around the 280, 275 will be the good level with the stop loss 250. So definitely it's still a good bet.
Okay, that's the thing that's coming in on BEL. And Sakshi, it's the entire railway space. Remember, we just caught it maybe at the first 1 or 2 minutes of trade, and now railway is going up like a rocket. What are the stocks that are moving within the railway space? Ratnesh, you'll have to revisit IRFC. I know you started this conversation with it, and RVNL. Now notice that again low ticket, high beta is moving faster within this zone. So stocks below 350, 200 are moving faster than stocks above 500, and that's borne out. Look at RITES, 1.1% higher, 724. Look at RVNL, 4% higher, 312. Look at IRFC, 2.8% higher, 178. Ratnesh, what catches your attention within the railway space apart from IRFC, which you've already spoken on?
After the IRFC, I believe that the IRCON is the very, I believe that it is very, it will be a very good bet because the IRCON is already broke its all-time high. So I believe that it is going to outperform this in this sector. So IRCON could be the good bet. Keep the stop loss around the 217 midterm target for the 325.
Okay. We have to also keep an eye out on India VIX again. There is a sharp uptick on this one, 9% higher today on India VIX, 22.22 as the current level on India VIX as well. Ratnesh, it's at a 20-month high level for India VIX. How are you looking at this? Again, the signs of volatility to start burning traders' figures?
No, definitely India VIX at the it is gradually going up because we are entering in the result session. The election result outcome. So definitely it will increase gradually. It may touch the 25 level, something around this, and the 28 even also, because it has given the breakout at the 17 and 20 level. So I believe that we can see the volatility going to increase, but I believe that still there is a stock specific action will remain continuous, so one should just concentrate on the stock specific despite this India VIX and the index and all these things. So it will be the better.
Okay, so we'll continue to watch out for India VIX. It's now at a level which was last seen on September of 2022. So a 20-month, surge as far as this one is concerned. So we'll continue to watch out for this. Apart from this, Dharmesh ji and both Ratnesh, I want you to focus on one counter, and that is Kaynes Technology that came into focus last week, and back to back we saw some sharp upticks coming in. This is after the earnings, and again on trade today we are looking at a sharp double-digit gain again coming in on Kaynes Technology, up about 12% higher in trade even today. From the EMS play, is it still the best bet that one should be really looking at, Dharmesh ji?
I don't know about whether it is the best bet or not, but definitely from the EMS basket, this should be there into it. And they have a different foray into multiple sectors as well from the EMS side. And it's a more of a thematic play over, say, 3 to 5 years kind of a period where valuations you have to, for the timing, you have to ignore that and focus on the growth trajectory which this company is embarking on the revenue front. So that is where things are hitting up for this company. Technological promise is already there, and all the verticals have been firing good for this company. Management is very aggressive and sounded very confident. So from portfolio perspective, from a few EMS companies you should have, along with Dixon Amber and should be there in the basket. That's more to do with the consumer play, but this has a defense angle and to it as well. So the case is a nice mix of EMS play, which one should be having in the portfolio.
Okay. What about you, Ratnesh? How would you look at it?
Let's get
Definitely, the 2 days back, it has given the very good breakout already, and in the before the I think on the result day, after the announcement of the result at next trading session 17 May, it was a gap up open and on the rounding formation, and it has given the breakout. So definitely from last 2 days, it has shown the very good upside move. But now let some settle somewhere around the 3300 3320 level, then we can take the fresh entry in these stocks with the stop loss 3200 level for the target in coming days 37 3800, something like this.
Okay, ladies and gentlemen, let's look at some other stocks. Sakshi, we haven't discussed Coal India for a long time, and it's now showing signs of strength, up about 2.1%, and what's coming back into focus is Tata Power. All of us sitting in Delhi can tell you, ladies and gentlemen, it's unbearably hot. The level of power demand in North India and peak demand has just shot through the roof. Every single power producer is now working perhaps at more than 100% capacity, and Tata Power, for instance, is now up 0.7%, 446. Very sharp move coming in there. Ratnesh ji, within the energy space, what catches your attention?
Well, within the energy space, well, we have seen the very good move in all the stocks, but I still believe that after some consolidation, that REC will going to outperform it still. So I believe that still around the if someone get around the 520 530 level, it could be the good level for the entry, and we can see the target around the 570 580. So just let it come around the 520 510 level in RSC, then we can take the fresh.
Okay, this is a stock that I'm marking, not taking a view on because it's ahead of earnings and they are always dicey to get into. BHEL 322, 3.7% higher, and this Sakshi will be some kind of a multi-year high. Let me just get that data for you. I am just marking it on purpose, not taking a view. Okay, let's just change it to a month, and you will get an idea. This is at least okay, this is the highest that we've seen, ladies and gentlemen, since October of 2010. So we are at a 14-year high on BHEL, and very sharp volume, very sharp price uptick, very high open interest ahead of earnings. Hindustan Copper has started to move 1.3% higher, 395, and of course Coal India. RVNL at 319 is also buzzing with gains. The entire electricity producer pack, SGVN 136.65, NHPC, all of them are now gathering momentum. We are at 932. The Nifty is down 27 at 22,473. Sakshi, what are you watching?
There's one news coming in on Coforge. It's actually done a generative AI tie-up with Microsoft. The stock's not reacted too much. It's just about 0.2% high in trade, but it's an important tie-up as it's with respect to Gen AI, and consistently all the focus from the IT companies is now shifting towards Gen AI and tie-ups from those as well. So this is the onset of another segment that the companies are focusing on, and few quarters from now on, it could be a big segment to track for all these IT companies as well. But it's the metal space that is definitely shining bright today, apart from Coal India that Shail has pointed out. Hindalco, Tata Steel, JSW, JSW Steel, Steel Authority of India. The entire space seems to be abuzz with action in today's trading session. Ratnesh, what looks positive to you within the metals pack?
Well, I like to mention here that two or one stock. First is the what I like to mention also is the Hind Copper is in Bain F&O. So just take a trade in cash market only if someone want to trade, because this is my one of my favorite, because it has given the very good formation on the daily chart, and I believe that we are going to see a very big target in this stock. So just today, I think it is in vain in the F&O. So keep the stop loss around the 360 level. I believe once it crosses the 402, I think we can see the target around the 450, 460 level in this in the copper. And the second one I also like to mention is the Tata Steel. Tata Steel is continues showing the strength and continue making the high formation. So it is on the verge of the breakout around 172. Once it crosses that, we can see the target 180 at 200 level. Keep the stop loss around the 160.
Got that. One more stock that caught my eye is Alchem Laboratories. Let's look at the stock. It's the top mover in the F&O space. It's shot up about 10% odd in trade today. A very sharp move can be seen. It's now trading at 5620 odd rupees in the F&O space, about 1.5% higher on the cash market space. Anything that you spot here, Ratnesh, that you'd like to highlight?
Alchem, if we talk about the Alchem, so definitely it is very it is very good on the chart and showing the very good strength on the chart. It has taken the in the month of the April, it has taken the support around the 200 moving averages, and we have seen the good volume activity also. So I believe that Alchem it is going to the fresh breakout once it cross around the it has given already the fresh breakout, but it still needs some confirmation about the 553040 something level. So once it cross that, we can take, then someone can take trade with the stop loss 5470 for the target 5600 or 5700 level.
Ladies and gentlemen, let's focus on the record highs, and this is a list dominated by PSUs. While we seem to be discussing them a lot, remember, we are driven by what's happening in sentiment on the market. There is nothing that is editorially inputted as far as this repeated mention of stocks is concerned. With that caution in mind, let me just highlight the list where you see record highs again. Okay, ladies and gentlemen, we'll start with BEL. We've mentioned it and discussed it often, but still 7% higher, 277. Stocks such as Balkrishna Industries, 7% higher at about almost 3000. This is a list out of NSE 500. Let me just give you a very brief idea upfront. About 30 stocks within the NSE 500. That makes it about 6%. 6% of stocks in NSE 500 are at record highs. Bharat Dynamics 6% higher, 2596. Within the railway space, Ircon 286, 4.5% higher. HUDCO from the financing of home loan space, 3.8% higher, 253. From the real estate space, ladies and gentlemen, Brigade Enterprises, 1230, 3% higher. SKF India from the bearing space, 2.3% higher, 6320. And there is a whole host of stocks again from the PSU basket, which I insist we are only pointing out because that's where the price action is. Hindustan Zinc 2.2% higher, 633. We have Hindustan Aeronautics 4811, 1.7% higher. We have National Aluminium from the metal space. It's actually changed a digit, 201, 1% higher. Container Corporation 1106, 0.5% higher. Oil India a bit of a downtick, but still at 645, a fresh high. And of course the entire capital goods space led by ABB 8428, 0.1% higher. Carborundum Universal 1757, a percent higher. Siemens at the prices just moved 72.91, 1.2% higher. And of course the likes of Linde India, SKF India, Keynes, as well as Polycab. Sakshi, what are you watching?
Samvardhan Motherson, after a long haul, is showing some traction in the F&O space, about 2.5% higher for this one. I remember this was the top choice for a whole host of analysts when the entire auto ancillary basket was on the move. Are you looking at some signs coming back for an upward rally to continue on Samvardhan, Ratnesh?
Motherson Sumi, if you look at the chart, definitely it is showing the good strength on the chart and making continue higher high, and now showing the some rounding formation breakout. So I believe that once it crosses the 133 level, we will get the confirmation of the breakout, and we can see the target 140 and then 145 level. So one should take the fresh enter also with the stop loss 130.
Okay, got that. So that's as far as this auto ancillary space is concerned. Anything else also that looks positive to you, Ratnesh? Within the entire auto ancillary basket, we have discussed the tire space with Balkrishna and the auto parts with Samvardhan. But anything else also that you spot which looks positive?
I like to go with the some definitely we have seen the good upside move already in the stocks, all the auto stocks, but I still believe that if some consolidation happen in the Hero Moto, I still prefer that it will definitely going to outperform. So, but not at this level, but once it consolidate around the 5020, 5030 level, then risk reward ratio will be in the favor. If the stop loss 4950, then we can see the target 5300 level.
Okay, got that. So that's on Hero Moto. And we were discussing about the entire retail space. Now I can see Aditya Birla Fashion and Retail showing some traction in the F&O space, about 4% higher in this one as well. Remember on Saturday when we were in conversation with Raghavendra, he had clearly highlighted that he is positive for the next week on two stocks, and Aditya Birla Capital and Aditya Birla Fashion were those two stocks from the group. Again, just opening on Tuesday, we have seen a sharp up move coming in on AB Fashion. How are you really looking at this stock, Ratnesh, now?
If we look at the first AB Fashion, Aditya Birla Fashion, so trading around the 275 level. I believe that definitely after a long consolidation, we are going to see the breakout in this stock. So definitely it can be the good bet. The target can be around the 290 level, and the stop loss will come around the 269 level. So this reward ratio is also in the favor.
$941, ladies and gentlemen. The Nifty is still caught in a bind, 29 points down, 22,473. Let's do a detour of the market. Remember, while the PSU pack is showered with gains, it's not all that hunky-dory as far as the broader session on the Lal Street is concerned on this Tuesday afternoon. And that's visible in the advanced decline ratio. Only 788 stocks are in the green compared with 1285 in the red. Business Today tracks 19 indices for you, only 3 plus 3. 6 are in the green. The Nifty Metals Index, as we had pointed out in our pre-market commentary, is the top gainer. Needless to say, a record high, 1.4% higher at 9747. Of the 15 stocks that comprise the Nifty Metals Index, 11 are in the green, and many of them are at all-time highs. Apart from that, you have the Nifty Energy Index. Like I pointed out, peak power demand is upon us, all of North India, all across Bharat, and that's boosting a lot of stock prices, as 40,700 for you on the Nifty Energy Index. Out of 10, 6 stocks are in the green. Where is profit booking happening, ladies and gentlemen? At the Nifty Realty Index. Nothing to be worried about. On a year-to-date basis, the Nifty Realty Index is up 29%. In 2023, it was up 90%. So nothing to be worried about. And if one were to close your eyes as far as the broader markets are concerned, one would imagine it is just a metals day. JSW Steel has started to roll, 2.2% higher, 910. Needless to say, a record high. Tata Steel is 1.6% higher, 170. Vedant 3.2% higher, 475. National Aluminium, like I said, record high, 170, 203. Okay, let me just do this exercise to tell you how many metal stocks are at record highs. This will take me a jiffy. All-time highs on the Nifty Metals Index. Hindustan Zinc 644.50, Hindalco 674, National Aluminium 203, and Welspun Corp 624. Remember, if you were with us when Mayuresh Joshi, head of research at Market Smith India, joined us, he had mentioned Well Corp as one of his medium-term fundamentally strong picks coming in. Strong moves in battery makers. Excite 2.7% higher, 491, and of course the market favorite Power Grid now 323, 1.7% higher. Sakshi, what are you watching?
Apart from all the energy names, etc., IEX caught my attention. Remember, this stock has been moving up from last week itself. So, just wanted to take Ratnesh's technical view on IEX as well. In the FNO space, it's up by about 4% in trade today. Worthy to take note of this at this point in time, Ratnesh, IEX?
Well, IEX was underperform from the very long time, but now it is consolidation around the the 200 moving averages. So definitely, there's some technical bounce we can play here. Still, not so much confidence, but technical bounce we can see up to the 172, 175 level with the stop loss 159. So just for the technical bounce.
Okay, got that. Whole host of stocks that Shell has already pointed out, which are at record high levels. Wanted to take a view on the cables and the wires space again. Polycab versus Havells, both at fresh record highs. Which one would you be really looking at trading now between the two of them, Ratnesh?
Polycab is definitely one of the favorite pick, and the Polycab definitely showing the good strength on the chart, and I think it posted also the good result. So I believe that the started a new journey and it has given the page breakout. So still there is a chance for the page entry with the stop loss 6500 level for the target 6800 to 7000 level.
Okay, got that. Okay, got that. So as far as the cables and the wire segment go, but within the railway space, are you looking at these stocks? FC, Ircon is at a fresh record high, RVNL, the entire space is buzzing. Which one catches your attention at this point in time? Where would you be more comfortable?
Well, my morning pick was the IRFC. So apart from that, then we have discussed the Econ also, and then now RVNL. So RVNL is definitely the one of the good pick. It has given the fresh breakout, so it's a reward issue in the favor. If the stop loss just 300 rupees, so I believe that we can see the target 350 or the 370 level.
Okay, ladies and gentlemen, again, as I say, where the price action is concentrated is, ladies and gentlemen, only on the PSU basket. Again, my apologies for repeatedly marking that. Now let me give you some more interesting data. Business Today tracks 78 PSUs for you. Out of 78, 50 are in the green, and we've discussed some of them, but new ones are now sort of moving up. Almost a 14-year high on NMDC. Again, this is metals led. You have a price ticket of 286 in front of me, and I'll tell you the percentage rise that we see on NMDC. I'm sure that's on the screen, but nevertheless, let me mention that to you. NMDC as a percentage rise is 2% higher. You have the entire defense pack now coming into very, very strong action after BEL's robust performance. Midhani is 4% higher, again PSU 495. You have Garden Reach Shipbuilders 2.3% higher. Cochin Shipbuilders has hit a fresh high, 1.1% higher, 1506. Sakshi and I have a joke on this one along with our very dear friend Gaurang Shah. the kind of thumbs up that he had given on Cochin Shipyard post split at 750 rupees was unbelievable. Sakshi, you remember that line, would you repeat it?
On Cochin Shipyard and on the defense space also, Gaurang had also mentioned, Shail, that one should not waste any more time but just get into these stocks right away. That is something that I told him that I will from now on remember his conviction on the entire defense PSU pack as well. And on Cochin Shipyard, for sure, he had said it's a screaming buy. That was his conviction when it came in on, post split, when we had spoken to him about. And the stock has now crossed the level, which was the pre-split level, and it is now trading at 1500 odd levels. So, very strong move is what we have seen just within a matter of I think weeks, and I will not even want to call it months, the kind of move that we have seen on Cochin Shipyard, Shail.
Right. Remember, the screaming buy was at 750 rupees, not at 1500 rupees. We emphasized repeatedly, we are marking the price, we are not advising a buy. At the best, we take a technical view and we avoid a lot of charts which to our untrained eyes look overstretched, beyond which you still have a very strong momentum coming in, ladies and gentlemen. So with all the required caution, act. If you act on the long side, please also take an independent view from a financial advisor and then only get into stocks. We still believe there is a better way of doing all these PSUs, which is via the CPSE ETF, via specific mutual funds, and of course via equity diversified funds. So our very sincere view is to exercise extreme caution. Now these are in trending phases of their bull charts, and these are very, very difficult to either get into or worse, trade. So if you have stocks such as HAL, Garden Reach, Massgaon Dock, BDL, BEML, and a host of other PSU stocks at record highs, the best thing to do in your portfolio is not to sell them. Just hold on, let us see how the rally moves on, and then we'll take a call. Ratnesh ji, I have to ask you, Cochin Shipyard.
And definitely, all these stocks are performing very well, and as you correctly mentioned, the stretch on the chart. So definitely, from my side also, the taking the fresh into at this level is still difficult. But if someone you can trade with the stop loss, I still suggest that they can take a trade with the stop loss around the 1400 level. So I can see the target around the 1600 or 1700 odd level, but keep the trade with the take a trade with the very strict stop loss which I mentioned.
Okay, ladies and gentlemen, and Ratnesh ji, thank you so much for this wonderful exposition of technical charts. We started with IRFC, and that's blown out of the sky in terms of gains. You've given us such quality inputs on so many PSUs, as also so many other technical charts, especially Hindustan Zinc. Thank you so much for your time, and hope you will be with us fairly shortly. Have a nice day. We'll start wrapping up the markets, ladies and gentlemen. Sadly, Tuesday started on a back foot, and the reason remains still unclear. The Nifty is sideways, still down 22,470 for you. The IT index is down 0.5% at 33,270. Nifty Bank on the back foot, 115 points lower, 48,079. Remember, these are all sideways markets, but the rally today, and as far as markets has been for the last 1 week or so, is in the metal space. Record highs on Hindalco, Hindustan Zinc, stocks such as NMDC, Steel Authority, and National Aluminium are at multi-year highs. And it's the entire PSU basket led by defense counters such as BEL that have gone up dramatically in trade, of course led by earnings. Like I had pointed out, we tracked 78 PSUs for you. Now 55 are in the green, and they are driven primarily by defense counters such as BEL, BDL, Garden Reach, Cochin Shipbuilders, and of course the metal plays, as also the entire railway pack. Ircon now 291. Like I mentioned, it is also at a record high. The counter is up 6.7%. We have a strong move coming in on rights, 2% higher, 7730. RVNL 7% higher. We end the show here, ladies and gentlemen, but stay glued to Business Today Television for all your needs as far as the financial news is concerned. Thank you so much for your time.
Beyond the wide roads, new flyovers, and swanky buildings, the Central Vista projects in the national capital